That's from Domain, that it's a real estate website. And basically we had Sydney, that's Q3 2022. We don't have 2023 yet, but it's pretty crazy when, like, okay, let's do a quick, all right, before we start, I just want to do a quick calculation. Let's get Excel here, and all the data I will get from Google. Okay, so let's go like that. Average income in Australia. So that's about $90,800. Okay, so that's the average income. How much is the average income? The average income is $9,800. $9,800. Now, that's the yearly salary. Okay, so that means that if we get this, if we get this divided by 12, equals, we get $7,566 per month. But this is without tax, okay? Because if we get the tax calculator, okay, oopsie, not this one, I like this one. Because if we get this and we put the annual salary, 90,800 annually without any bonus, okay, this is how much we're gonna get taxed. $21,793. Okay, 10 grand will go for the Medicare. So now if we get this number here, 21,000, right, and we just paste it here, we get this one minus this one minus this one. This is actually what we will have. Okay, so pretty interesting how much is it? 69,007. So this is actually what someone gets paid in Australia. That's $5,750 average. All right, this is average. Now, that's only $5,000. Do you think it's a lot, right? Okay, not a problem. $5,000 seems a lot. Let's say these people lives in a rental property. Okay, average rental price in Sydney, right? Looking at the median weekly rate for both houses and units, Sydney is currently the most expensive city to rent property in. Over the pandemic, this bounce between Canberra, blah, blah, blah. As of May 2023, Sydney's median weekly rent for a unit is $648, and the median house rent is $743. Okay, so let's do like this. Let's get this number here, and let's get this number here. All right, oopsie, that's not what I want. Let's do it here, and then we get equals, we go sum, and we get this number. Hate sum tab. Now this one, divided, close, divided by 2. Right. So the actual average is somewhere between $697. All right. Average rental per week. Okay. That's per week here. Nice. These, okay, we're gonna get this guy here, oopsie, this guy here times 4. That's gonna be $2,790, all right, per month. Okay, so let me put here average rental per month. This guy will come here, and this is what we got. Now, when we say this, just to live, all right, just the basic life, it's going to cost you, just to have a property, just to actually, like, don't get rain on your head. This is how much it's going to cost you, $2,780, all right? I'm not saying random numbers. I'm saying like actual, you know, from website numbers. So now if we get, all right, let's do like this. This minus this one. This is what you have in the end of the month without any else. All right, this is just rental. You still got like, let's say $3,000. All right, realistically, you still got like $3,000 realistically. Now from this $3,000, let's have a look just to leave. Average price in supermarkets in Sydney. All right. This is from Kenstar Blue. Okay, they're pretty reliable. There we go. Average weekly grocery bill, Western Australia, New South Wales. This is the one. All right, this is weekly. All right, let's take it easy. Okay, let's take it easy. But let's take it easy. Let's put $159 food. Okay, let's take it easy. $159 as only twice a month. All right, twice a month. Let's say you do twice a month. All right. Why my things are not actually working? I don't know why it's what's wrong with my sorry, what's wrong with my, so that's how much you're gonna get. All right, $3,018, $3,018. So we're gonna get this guy here minus $3,1800. So this one minus this one, this is how much you still have. Now, this is just the basic life. You can still have some good money in the end of the month, right? $2,642. Now, if you actually have a life of an adult life, okay, because to be honest, there's not any like simple job that will pay you this sort of income, okay? There is, you must be a really good professional to get paid $90,000. But anyways, so I just want to show you something like pretty, you know, it's not stupid, but it's here. It's like, it's economics, all right? It's something that we all talk about every day. Let's go back to let's go for inflation overview. So the inflation right now in Australia is at 4.1%. And the monthly is at 3.4%. So let's get the 3.4%, right? Let's just get 3.4%. Let's not go too high on that. So your money is actually 3.4% less valued every month. All right. It doesn't seem much, right? But if we add into the year, that becomes 4.1% adjusted. All right. So if we do a calculation called TVM, that's the time value of money, as well as the FVM, the forward value money, you can get pretty shocked how this $2,000 in the end will be like 1,900 or something. All right. So it pretty decreased your value by 40%, 35%. But this is just food and rental. Imagine if you have like, you must have, you know, you need to go somewhere. You need to have an Opal card. What is an Opal card? Opal card is public transport, right? Public transport. This is what an Opal card is. And the maximum they can charge you is $50 per week, right? So if it's $50 per week times 4, you're getting $200 of PayPal every month. All right. You still have your car loan if you have a car. All right. That's between 400 to, it just depends what car you have. But this person here getting 70,000, it must have like somewhere between $500, $700. Let's say 650. All right. Minus, that's what, C12. All right. And then it goes lower because you have the gas as well. You have the gas of the car that's going to cost you pretty much $50 to $60 a week, I'm assuming. So let's say 55 times. My car, I spend $100 a week. All right. It's a sport car, so it does get lots of food. So 55 times 4, there you have it, minus $200 there. Okay. And you go like that, in the end, you're gonna have like $1,000. And anything goes wrong on your life, you screwed because you don't have money to pay. You don't have like how can you do things, you know? I'm not even putting like outside parties, you know, if you go to parties, if you have clothes, that's important as well. You know, you have computer, internet, Wi-Fi, you have Spotify, you know, Netflix. All of those small things will add up in the end, you know, like, let me put it, minus this one, minus, oopsie, minus this one, minus C16, minus C17, minus C18. There's a smarter way to do it, but I'm just not looking. So outside parties, you spend like, I don't know, $100, $150 a month. Clothes, $120 a month if you need. It's not something that you buy every month, but I don't know, let's say you are addicted to buy clothes. Internet, somewhere between, it can vary like from 80 to whatever, but let's use 80. That's what I pay. Spotify is $10. Netflix is 20. You know, and there you have it. You have $1,000. That's it. Done. Gone. It's like, can you see like how quick the money goes out of your pocket? All right. Why did I done all of that? All right. Why did I show all of these? Why did I do all of these math? I know it sounds very stupid, right? It can sound very stupid, like, all right, you're not actually getting 70,000. You're not actually getting 70,000 on your bank account every month. All right, sorry, on yearly every year. The actual thing that you can probably save, is between $800 a month. All right, and now we say, and now the central bank comes in and say that inflation is to be controlled. Okay, we had a very bad inflation at 7.8. People think that we actually have a like whatever 4.1% inflation. I know. It's you're completely right. Like, yes, you're completely right. There's all the taxes. Imagine, like, okay, imagine if we don't have taxes here, all right? That's gonna be $90,000. All right, 90,000 divided by 12. That's gonna be 7,500. You still save up 3,000. Look how good it is. You just came up with $2,000 from nowhere. Well, the government does a job, it does it. All right, it does. But that's not the thing. I just got like, it's so stupid how the government is able to get money from us like so easy. So easy. I just parked my car a little bit wrong. I'm not joking. It's a little bit wrong. The lady come in and say to me, well, I'm gonna have to fine you because your car is not fully parked on the bay. I was like, oh man, come on. Come on, really? How much is that going to be? Like $50? No, it's going to be 180. What? $180 for just not parking the car like perfectly aligned on the station. Are you joking me? And she was like, no, yeah, this is what we get. This is what she say. This is what we get trained for. I was like, okay, you joking? You joking? That's anyways, I'm not here to complain about tax, but just an overview. Life gets hard and it's not getting easy. um Anyways, a guy, I'm French, most taxed country. That's true, because you use your money that you won, that you pay tax on, and then everything you buy, you pay individual tax. That's true. That's true. Anyways, end of story. So what I think that all of the hiking rates still have to be affected into the economy. It has been fully affected into the currency already, I guess, because when we look to Australian dollar right now, all right, let me get it. I remember I told you guys the short position on Australian dollar. I remember here, all right, it went up, now come down again. Anyways, so I guess it was fully affected already because of the last 2022, from, sorry, 2023, we did had a pretty okay year, like here, and then in the end of the year when US dollar had the downgrades on the economy, we did had the RBA came in and say that they would maintain the rates for longer, and therefore we had this move up on the Australian dollar against US dollar, and against some other currencies as well. All right, so pretty interesting there, right? When we look to the currency getting affected into the interest rates primarily, and now the inflation that have led the hikes will come to the economy. So, and the end of the story is people keep buying properties and spending money on that. Okay, I have the card of the person that just handed me in. See, I have it the back here, like just sold. 5 bedrooms, 3 bathrooms, 2 garages, 217 square meters for $1 million. All right, and another one, 4 beds, 2 bath, 2 garage for 900,000. Okay, and like it's just stupidly crazy. Anyways, it's crazy. Okay, let's move on. What do we have this week? I hope I wasn't like a little too much here, but I just want to show to you guys that the situation of the world right now, It's not doing great. Okay, not doing great. Right. So yeah, they took the TDM to the ground. Yeah, time value of money. Yeah, you're right. And they can do it. All right. Anyways, so this week, what do we got? Okay, Monday. We didn't have much. We did had the 2:30 a.m. on. Okay, this is not my time frame. There you go. We had the capital spending year over year on Japan. We did had company gross profits. That's not too much. We did have the CPI month over month and year over year on Switzerland, on Swiss. That is pretty good for the Swiss franc because it came 0.1% higher than expected. Okay, so have a look on that. 0.1% higher than expected. Expectation was at 1.1 and it came at 1.2. Here, 0.5, it came at 0.6. Let's have a look on something. USD Okay. Now, look at these. Where's my pen? Where is it? Here. We just had this area here affected by the CPI. All right. This was the area. Okay, so we had okay, right? So that was a pretty good move in a sense for day traders, scalpers, but for swing trade, the trend is still up. Okay, because this is the top. We're coming to break it to break the top, most probably coming to the target I've mentioned a few weeks ago at 0.90. Okay, so we're doing pretty great on this trade, let's say like that. But look at how interesting. Remember last week when, sorry, 2 weeks ago when we had the yen, okay, coming at 0.1 higher than expected. Very, very similar than the CPI for Switzerland, okay, for CHF. Let's have a look on USDJPY. Okay. Okay. So have a look on this. Okay. We did had a much bigger move, much bigger move. And before that, primarily that we were consolidated. Okay. I've explained why already this happened because we were on the intervention level. But what I want to say to that is, isn't Japan the best market manipulated in the world from the central banks? Yes, they are. Why? Because they knew already that Japanese yen were getting weaker. Therefore, they left it without doing anything, just losing ground to the US dollar. USD JPY skyrocketed to 150. Well, what we see BOJ, Bank of Japan, coming in and say that they may be doing an intervention. Well, what does the market do? Don't trade USD JPY. What happens? It goes sideways. Okay. Then we have CPI from Japan coming 0.1% higher than expected. And then what happened? We see this massive move down. And then what happened here? Oh, interesting. That's only 0.1% higher than expected. Let's buy USD again and forget about JPY because the BOJ, Bank of Japan, won't be doing intervention, nothing. All right. Then what they do, they buy Japanese corporate bonds and Japanese yens. Therefore, they're still holding big positions on long USD and short Japanese yen. So this is what I'm saying. All of those pullbacks, people get afraid of. I'm not saying that you shouldn't be afraid or whatever, but I'm just saying like it is just a, I don't like to use this word, but it's just a manipulation of a certain way, not there's lots of different ways to manipulate a market, all right? Especially like in order books and like depth of market and so on. But on here was a different scenario. It was from the Bank of Japan doing a speech, and that's what they mostly know how to do it. That's what they are like professionals on. They come to the media, say something, and then they go away, and then they wait and come to the media and say something again to buy on a better price. So I've mentioned already, I don't think it will have an intervention. And what most probably will happen is that we will go to 155, and that this is a good level to long and to stack your long positions here. All right. This is my personal opinion. This is what I'm doing. Okay. It doesn't mean that you have to follow what I'm saying. You don't. You have your strategy. You follow up your strategy. I'm just putting the ideas. I'm just putting the data on the table. Okay. So when we come and see this brutal difference between one economy that it's Swiss, have always been the safest asset to have your money at, because it's a how do you say, it's a stable economy. You know, you have low inflation right there. That were the first country of the G10 to control inflation. So therefore, we will put our money there. Well, it worked for a while until it doesn't, right? That's what happens in finance most of the times. It did work for a while, but now it didn't. It's not working, all right? Sorry. Here. It worked for a while, but now it's not working anymore, right? So even though inflation is low, even though inflation is high in Switzerland, investors seem like to don't care about it. All right. Now, moving ahead, on Tuesday, that's today from me, we have retail sales 11 a.m. for UK. Came in lower than expected at 1%. What else we're gonna have today? Oh yes, we're gonna have composed PMI, Italian GDP, and all of those other Europe countries. We have PMIs as well, like French, Spain, and German. And then we're gonna have PPI, year-over-year, month-over-month. But the most important one will actually happen on Wednesday for ISM non-manufacturing PMI for US, as well as the GDP for Australia. And there's a spring forecast statement from UK that we're going to have from the Fed as well. We're going to have as well on Thursday the Bank of Canada interest rate decision. That's going to have pretty importance to the market. I'm going to touch base this now. So if you look to USD CAD, right? What's happening here? All right, since beginning of this year, if we look at this. Okay. That's cool. Just got my target hit. I've mentioned for someone that this would be my first target of USD CAD, this level here. It just got hit. So that's a pretty good trade there. I didn't get it, but I've said it live. Now, okay, when we look to USD CAD, what is happening here? Well, CAD is very weak. It's losing its strength. US dollar is stronger, and it's just losing for USD. One thing that it's mostly expected, you know, we can't always say 100% because they can come up with a surprise, but let's call it 89.99%. All right, let's leave 11% of error margin, but it's like I would say 100%, but anyways, I can't. Bank of Canada will continue to pause the interest rates. will continue to pause interest rates. Well, why is that? When we look to the Bank of Canada statement, all right, what's that? Bank of China. That's not what I want. Canada. There we go. Okay, here. From Bank of Canada maintains policy rate continue time. That's the one. Maintains policy rate continues. Okay, this is the one. So if we look at here, the Bank of Canada, this is from January 26, 24, January 24. Oh, there we go. January 24. The Bank of Canada today held its target for the overnight rate at 5%, with the bank rates at 5.25 and 5.25, and the deposit rate at 5%. The bank is continuing its policy of quantitative tightening. Global economic growth continues to slow, blah, 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 blah. I want it here. Given the outlook, Governing Council decided to hold the policy rate at 5% and continue to normalize the bank balance sheet. The Council is still concerned about risks to the outlook for inflation, particularly the persistence in underlying inflation. Governing Council wants to see further and sustained easing in core inflation and continues to focus on the balance between demand and supply in the economy, inflation expectations, wage growth, and corporate pricing behavior. The bank remains resolute in its commitment to restoring price stability for Canadians. CPI inflation ended the year at 3.4. Shelter costs remain the biggest contributor to above target inflation. What am I saying? It's the same thing as Australia. Inflation rates have gone to the roof. Why is that? Because of rates have been going to the roof. When rates go off to the roof, real estate market works pretty simply. Okay, very, very simple. I can show to you in 1 minute. All right, here we have the average person. Let me get a pen. Here we have the average person in Australia getting paid whatever, okay? And that person is a compulsory spending, that it's mostly obviously in a capitalist word. And he can't have a property. Well, not a problem. Here we have Mr. John that owns 5 properties. All right, he owns 5 REs, 5 real estates. All right, so he has 5 real estates. He say to this little guy here, this little fella, hey mate, if you want to live on my property, not a problem, I can rent it for you. And he's like, oh, okay, cool, I want it. All right, there he goes to the new house. He's going to be paying for Mr. John somewhere between $640 for his property. All right, Mr. John gets paid around $560. Why is that? Because he needs to pay the real estate agent that rented the property for him and blah blah. From this $560, that's what Mr. John was paying when the rates charged on his mortgage that he used to buy the property that now Mr. Something here is living on was at 2%. Well, what just happened now? Forget about the 640. We went to the pandemic in 2022, right? 2021, sorry, 2021. And now it's 2024. Well, now the rent went to $800. All right, so $160 of increase per week. Now Mr. John doesn't get paid $560 anymore. He gets paid $730, somewhere between that, $730. All right, because the rates now it's 4.75 if you get a good rate. Okay, so this is how real estate works, because people get the money from the bank to buy the property and rent the property to someone, pay the mortgage for them. Let's say that Mr. John is paying $4,000 per month on his mortgage to the bank. All right. So then this guy here is paid $800 per week. So if we do 800 times 4, that's 3,200 if I'm not wrong. And now this guy here that doesn't have a property is paying for this guy to have a property. Why? Because he could save up $100,000, $200,000 to give the initial deposit of the property. That's going to cost him like $1 million, right? He needs to save up 10% of that. That's going to be $100,000, right? So he saved up $500,000, $500,000, and he bought 5 properties with 10% deposit. Sometimes it's 20, okay? So that's going to be 200 grand, right? So he had $1 million and he bought 5 properties. He could have bought it one, but he was smart. He went to the bank and he said to the bank, mate, look, I want to buy a property. I have 500 grand just now here. It's my asset, all right? It's liquid assets. It's, we call these M2. That's the, sorry, M1. That's the money that it's assets, liquid assets. Give me 5 million, all right? And I pay you 500 grand. And then I pay the rest monthly. The bank was like, yeah, you signed like a good client. I'm going to give you 500 grand. Here it is. Take it. Go away. Buy the property. This is how real estate market works, guys. Welcome. So when we look here, this is why the inflation, in a way, it got through the real estate because the rates went up. So therefore, the landlord have to raise the prices of the property, sorry, of the rent to the guy that lives in there. So it's nothing wrong with that. This is how business works. But when we look to these, you know, coming back to USD CAD now, US dollar is still maintaining its strength and is still maintaining a hawkish approach, as the Canadian bank is still maintaining a neutral to hawkish approach as well. So what is going on here? Well, if we look to the data, where is it? If we look to data, it's not coming well, it's not coming good in Canada. But like the GDP of Canada, and let's have a look here. There we go. That's not the one I want. That was only 0.40%. All right, monthly GDP, that's redundant. It doesn't need this. Anyways, monthly GDP month over month was 0.4%. When we look to USA, we got 2%, right? 3.2%. So how can we compete with 0.4 to 3%? Well, pretty unfair, right? And therefore, investors are still believing as the US dollars is still high. And we still got the oil prices that they are high. They are high. They're not there. They are in the high, but the tensions continue to escalate on the on Israel and Hamas. Now coming back here, okay. So my take, just forgot to say, my take is a pause again on interest rates decision and a neutral approach to the rate statement. Okay, this will lead with a stronger, a weaker Canadian dollar. It can be strong for the first, I don't know, first minutes, but after that it's going to be weak. Fair Chair Paul testifies, and then we have Jolts coming now. We see, oh, that's very important. We have trade balance, exports and exports for China. And then on Friday, we have the big boy. We have ECB coming in. Wow, that's going to be interesting. What are you guys thinking? I'm going to drink some water here. Let me know. You guys thinking of a pause, or you guys thinking of a hike? And if they pause or if they hike, what's going to be the speech? Do you think it's going to be hawkish, dovish, neutral? What's going to go on? Okay. My take here is, let's go Eurodollar. Most probably, okay, most probably, what we will see on this week of, where's the thing? Oh, here. What we will see this week is a range bounding Eurodollar. So it's very good to trade support and resistance on the Eurodollar this week, I would suggest, if I could. Because we have it this here, right? Why will the market trade range bound? Because the market doesn't have any way to go. All right, pretty simple. Why the market doesn't have any way to go? Because he's waiting for US data and Europe speeches and data as well. So every time it comes here, we go down. Every time it's coming here, we go up. Every time it comes here, we go down. What are we happening? Down. Unless something happens before that, and then the market will trade accordingly to that. But one thing, primarily, this will definitely change the way, or whatever, it will give away, that giveaway doesn't look like, give a direction to Eurodollar. Okay, why? Because the market wants to know. The market wants to know where the Eurodollar will go. What the ECB will do. Because one thing happened here that maybe you guys don't have, don't have the view between these, but I do like to pay attention. What does Jerome Powell mention and what does Lagarde mention? All right. It's pretty interesting how Lagarde have wanted to. Okay, that's going to be a bit hard to explain. Let me grab a pen. Okay, so we have the Fed here, and we have the ECB here. Okay, the Fed said something on pink. All right. ECB say something white. Then the Fed say something on yellow. And then the ECB said something on pink. What's happening? So basically what I want to explain is the ECB is lagging what the Fed says after the one meeting. Last year was 2. Now I guess it's 1. We don't have that much data yet, but it's looking like it's going to be these. So everything that the Fed says, ECB says into 2 after what the Fed says. So what does that mean? Well, that means that if the Fed cut first, ECB will cut after 2 to 3 months. Okay. You first of all, you need to understand that euro and US dollar, they are the biggest ones in the world, and they do trade the majority of the market in the world, business and money transactions from one country to another and so on. So when we come to Forex, we need to think like that. And this is what I'm presenting to you guys. So most probably that this will happen, okay? And what will the ECB say? Someone just mentioned on the chat, and it's completely right. They will mention that they need more data, exactly as the Fed did on January. Okay. Is it a magic? No, it's not magic. Is, you know, I'm just paying attention to it and I'm observing that this is what it's happening. Now, will this give a hawkish approach or dovish approach to the market? It will all depend, all right? The whole thing here, it's not about the interest rates decision, that it's priced in a pause. It's not about um, the well, it is about as well, but not too much, maybe like 60%. The other 40% we need to pay attention at the questions, and as well as how Lagarde will address the inflation, higher inflation that we just had, higher print inflation that we just had from the Europe, right? Europe inflation rate. There you go, inflation rate here. Where is it? There we go. Here, the consensus was at 2.5 and the actual came in at 2.6%. So it came 0.1% higher than expected. This is month over month, sorry, year over year. And are really interesting to see how Lagarde will, you know, address this, because it came 0.1% higher than expected. Market did price in, you know, a big move to the euro dollar on this day. But if Lagarde says that they want more data, that's going to be following the Fed. If Lagarde says that they will maintain an eye on inflation and subdue inflation markets as well as real estate market and global outlook, most probably this will take as dovish to the market and euro dollar will go down. I'm not expecting to go up, to be honest. Maybe we do have a tick up, but you know, I'm not looking to trade like the higher than 109, let's say. Okay, most probably we will have a comeback to 107, all right, somewhere around that. I do believe we will come. All right, that's my interpretation. What else we have? Press conference, and then we have GDP for Europe year over year, quarter over quarter, and we have non-farm payroll coming at 190,000. All right, this is the forecast for the NFP. This will be really, 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 really important what the Fed will say and how the market. Okay, there's one thing here that is going on. It's the data that comes. It's just a perfection. I have a big smile on my face right now. So we need to see how this data will come and how all the US data will come. Not because the data, but because of the Fed and the market. What will the market expect from the Fed on the rate cuts from this data? Okay, if it comes higher than expected, how will the rates will be cut in June if the market is expecting to be cut in June? Mate, sorry to say you, June is like 3 months away. 2 months away, sorry. Okay, it's like that. It's just a flick on your finger, mate. We are already on this first week already, the second week already, nearly second week already of March. So it's going quick. All right, and when we have this popular phrase in Brazil, when the water comes on your butt, you start to move. Nah, you need to start move way before that. All right. So I'm really interested to see. I don't have any idea yet on what this will happen, but I promise to you guys I will come here on Thursday and I will have some some of idea on what we can expect from here. I'm going to read some bank researches, call to some friends and see what they're expecting as well. But what I'm looking at, I mostly probably will see this, okay? We most probably will see this because I don't see any targets going higher than here. Okay. This is going to be a good one, but not for now. I think this one would be the best target at the moment. And then after that, even though maybe extends to here, but primarily here. Okay, so this is my view on euro dollar. Now, pound dollar. Pound dollar still short. No, it didn't broke to the top here that I was mentioned last Thursday, if I'm not wrong, following the pound, following euro dollar. Okay, now look at this big boy here. I think I was right, wasn't I? I was, yes, I was. Euro dollar down, US dollar down, gold up. This was exactly what happened on the PCE last Friday. Okay. So pretty interesting market. Pretty interesting market on here. Most probably we will have a breakthrough these all-time highs on gold. And I was saying this a long time ago, right? We catched this low here, all right, to somewhere around here. I think this was my target at 2000. It's 2000. Yeah, I think 2000 was my target. Can't remember, or 1900. 909.80, something like that. And now I'm looking to break through these, but this is definitely not a good spot to buy in my strategy, because my strategy look for pullbacks, but following the trend is a good strategy. So that's going to be a good trade when we have it. WTY coming down, as I've mentioned as well. All of these highs, it couldn't break through yet. Well, I tried to, but it didn't. DXI coming back as well. And that's it. That's pretty much it. Do we have any questions, guys? No questions? KJPY? Yeah. What did I told you last time about KJPY? I forgot. I think I was looking too short. Let me have a look here pretty quick. Just a second. Gold. I'm just loading my terminal, Matthew. I'll answer you in a second. Gold is what I've mentioned. Gold, I'm looking to this. I'm looking to probably come back somewhere here, and then and then here as well. But gold will be most probably with the NFP. All right, because of gold don't have much to trade right now, as of news events, but we have pretty on a pretty high point at the moment, very close to breakthrough the all-time high. We are 1.60% there, but we do have some targets, consolidations area that the market can come back. So pretty interesting, I would say. For this week, I would try to trade the pullback. That's my personal opinion. Matthew, CAD JPY. Let me have a look here for you, my friend. How is in France, man? You doing good? Okay. CAD JPY seems a bit tricky at the moment, but on 1st of March, somewhere here, we had a switch from 62% short. Okay, from here. So feels like JPY it's stronger. All right, it's stronger. So it's a risk trade, man. I would try to allocate my portfolio in other like asset classes, like not asset classes, but why do you want to trade CAD JPY? You can unmute yourself if you want to talk. Because what I see is, okay, because what I see is JPY sort of strong at the moment compared to CAD. Canadian dollar a little bit weaker, but there is a potential there. You know what I'm saying? But it has to be a little spark to actually come in to the play, right? Long position, it's not a bad idea to have on your portfolio. It's just off like I'm not comfortable to trade JPY at this moment. You know, I would rather allocate my capital into other CAD like USD CAD or Euro CAD. But if your strategy works on CAD JPY, like you have a signal, that's good, man. That's a good one. My opinion, in my personal opinion, what I would do is I would long it as of the DXM, but then I look to the other side, we have JPY, so I'm just like, not looking to it. All right, any more questions, guys? Hope I helped you, Matthew and Tol. All right, guys, I see you on Thursday then. Hopefully everyone have a lovely week ahead. And if you have any questions, you know where to find me. Just go to Telegram and look at my name and send me a message. All right, see you all on Thursday. God bless you all, and I'll see you. Bye-bye.